The ultimate in real estate is being the bank. Now, whether or not you understand what that means, I didn't. I thought that it meant I had to have millions of dollars first. But luckily, for me and for you, that's not the case. So in today's episode, we're going to talk about you becoming the bank. But we're going to talk about that with a focus on private lending. Because being the bank means you've got to imitate and mimic the bank. So how do you do that? Well, I'm going to cover the 5 steps for you to become the bank and mimic exactly what the big institutions do. I'm Shawn King, Infinite Banking Specialist, and today I'm going to break it all down for you. So when you first get into the real estate game, most people are on one side of the coin. That's the I need money side. How many of you can relate? You need money to make money. Without money, you can't buy the deal. You can't do the marketing. You can't hire the staff. You can't do anything. So I'm assuming you're probably on that side. So let's talk about it. You're the borrower. Where do you go when you need money? Well, we've all been taught our entire lives that we go to banks. We walk in there, we grab our dumb suckers, and we enjoy that sucker while we're making a deposit. But does the bank actually take our money and put it into a safe in the vault? No. What the bank does is the bank actually moves our money. The bank makes our money that we work for go to work for them because we allow them to. And then when we need money, what do? We go back to the bank and they give us our money and everybody else's money pooled together. And guess what? They charge us an interest rate. But how much is the interest rate they charge? Well, it all depends on the timing and where prime and all those other things are. But cut that. I can guarantee you it's more than what you make. If the bank pays you 1%, which will be the absolute max you start seeing again here soon. But if the bank pays you 1%, they're charging you 6 or 7. And in the middle there, it's what we like to call a spread. It's brilliant. And how much risk does the bank take on to make that spread? Basically none. It's not even the bank's money. It's our money that we gave them to hold on to. Then they make our money go to work, and what they do is they take collateral every single time, unless it's debt consolidation loan or an uncollateralized loan, but those rates are through the roof. Right now, they're more than double digits. I mean, think of credit cards. You're talking 20 to 29% because it's unsecured debt, and they charge a bloody fortune for that kind of stuff. So if you really think about it, banks are they're cleaning house. They're making a ton of money. They're making a huge spread because there's a lot of people like you and me that need money to make more money. But we carry all the risk, not the bank. So if we screw up and we don't make payments, what happens? Well, our credit score gets dinged. They take that asset, whether it's a car, a boat, or a piece of real estate that you're flipping or renting, whatever the asset is, they just come in, they snatch it up. And let's be honest, that's what they should do, right? If you're not going to be a good steward of the bank's money, then why shouldn't the bank just take what you put up for collateral? Makes logical sense to me. But the whole time the bank was lending that money, they knew what their spread was. And in that spread lies the opportunity that my mentor taught me. The ultimate in real estate is being the bank, you guys. It's the spread. The fact that you need money is not going to change. So let's talk about what it is that you need to do to get the money you need. Well, you can go into the bank. But when the bank says no, because the markets are going straight down and banks are tightening up, you're not going to get the money from the banks. Oh, and also, if you don't fit in the little square box that the banks want you to fit in, your debt to income ratios aren't just right, your credit scores aren't exactly where they want them to be, your income, well, it's not in the right place. You're not a W-2 employee. Instead, you make 1099 income. Banks don't really like that. All that crap. Chances are you're going to have to seek out money elsewhere. And where do you land? Well, you go online and you say, I need money for real estate. And what do you come across? You come across hard money lenders. Now, there's a big difference between hard money and private money. But most of you don't quite understand that yet. So let's just define what hard money is real quick. Hard money isn't hard to get. Hard money is institutions, okay? It's either a group of investors that come together or it's institutions that raise money on the outside through private funds, and then they lend that money out to people like you and me. Essentially, they do what a bank does. You see, they mimic what a bank does every day, just like you should, right? That's what we're talking about here. They charge a much higher interest rate because they're not a bank and they're taking on more risk. They're lending money at a higher percentage, and they're going out there and lending to you because you didn't qualify for bank financing, but you need that money and you need it quick, right? Isn't that the key factor in real estate? I need my money now. I need to get on top of this deal now. So while you're looking for a solution, you land on hard money. Now, hard money is not fun. Number one, it's really expensive. There's fees left, right, and center. Not only are there fees left, right, and center, they want a ton of information, just like the bank. And you thought this was going to be easy. And then you get in the process and tick tock, tick tock, tick tock, your deal is going to end. And you don't have the money yet. So you're really in a tough place. The hard money lender is in control of the situation. But then, somewhere along your journey, you meet a neighbor, maybe a coworker, a friend, possibly a family member, and you tell them about this experience. You tell them about these awesome deals that you're finding and how all you wish you had was some money to fund these deals. And your neighbor, your coworker, your friend, whoever sits there and says, well, I got a little bit of money. I got a little cash here. What if I lent you some money? Now all of a sudden, what they're talking about is being a private lender. And you, being the borrower, thinks to yourself, well, yeah, that'd be great. And now that opens up a whole new dimension, a whole new world. It's kind of like you just arrived in the Matrix and you have a choice, red pill or blue pill. Which is it going to be? Do you want to go back to the old way, or do you want to open up this new matrix of working with people that actually care about you, people that actually want you to succeed, people that actually want to build a relationship with you? That's right. Private lenders are just like you and me. They're not institutions. Nope. They're just folks that have a little bit of green, whether it's home equity lines of credit, maybe they saved up a little bit of cash in their savings account, and they're sick of losing money to inflation. Or maybe they had an old job, they had a 401k that they roll over into a self-directed IRA, and they're just saying, you know what? I got this money, and I want it to be making something. So, hey, your deal looks pretty good. So we're going to define this today. We're going to go over the pros and the cons of private lending, but we're really going to focus on the 5 things that one must do. I don't care if you're a borrower or a private lender. There's 5 things you must really be aware of going into this whole thing. So let's do a quick rewind. We need 2 parties, right? We need people that need money, that maybe some of you need money to make money for that new deal. All right, great. But unfortunately, that money that you need, you don't have. But you got a great opportunity. And some mentor or guru or YouTube video or Instagram or TikTok person said,
it's all about the deal. If you got the deal, the money will come.
And you're sitting here, you're like, all right, money, come, please, show up. I've got the deal. And then you realize that you actually have to go out and do something to find that money. That brings me to the other side, people that have the money, the other private lenders. I don't care who they are, but they've got money. And you know what? They're thinking that they've got all this money that I worked really hard for, and they don't want to put it in the stock market because they're worried about it going down, which, let's be honest, it's definitely going to be going down. So what do? Well, I can just leave this money in the bank, but the bank's not paying me anything on it. The bank's actually making a giant spread on me, and I'm making basically nothing. And then they remember one of those YouTube, TikTok, or Instagram videos where someone said, you know what? The ultimate in real estate is being the bank. Own nothing, but control everything. Go out there and make interest rates on your money, just like the bank does. And they start thinking about it, and they think to themselves, I wonder where I could find one of those people that needs money. And lo and behold, they find you. Or maybe they don't. You see, one of a few things has to happen. You need to know them, you need to like them, or you need to be introduced to them. And that seems easy enough, but in today's world, it's pretty tough. So we got to find a way to connect people with money to people who need money. And I don't care if you got money, your problem is you want to make more of it, right? Or am I wrong? You got money and you want to make more of it. I mean, how many of you guys have money? Do you just like that money just sitting there, not doing anything, losing for you? Like being in the stock market or in your 401k, just going down and down and down and maybe back up and then down? No, actually, you get nervous when that happens. You start panicking when that happens, all because all you want to do is make your money grow. Great. Now we've got the recipe for perfection. And now we've got the makeup of how a good buddy and associate of mine, Chris Noggle, came up with an incredible community, a software platform called Private Money Club. Because you know what? Much like us, he used to need money. And now that he has money, he wants to make more money. And to make more money, all he's got to do is just go back and loan that money to the exact type of people he was before. Someone who's looking for money for a great deal. He's created something of a dating site that allows you to connect with a community where you can actually go and meet people and you can look through deals and you can look through private lenders. You can read profiles, what they want, 10, 12, maybe 15%. And you can go through and look and see how this whole thing's being done, because we learn by doing and we learn by seeing how other people are doing it. I mean, let's be real. You can't just walk into a bank and say, hey, Mr. Vice President Banker, can you walk me into the back office and show me how you do all of this? Like how you track everything and always make such a solid spread? No, they're not going to take you back there and show you their secrets. That's the bank's job, right? They don't want you learning how to be the bank. So instead, you come into a community like Private Money Club, and the first thing that you needed to figure out is, what are all these people doing? And the second thing you need to do is you need to start building some relationships. Send some emails, maybe shoot out a couple text messages, maybe just say, hey, I noticed you on this site and I was just wondering what it is that you're looking for. And if their profile didn't already say it, then they'll email you back and they'll say, yeah, I'm looking to move some money. I got some money just kind of sitting on the sidelines over here and I'm looking to make 12 or 15% or whatever the rate is. And you're like, hey, I'm looking for someone just like you. I've got this great opportunity. I'm definitely willing to pay 12 to 15%. So let's chat. Wow, that was simple, wasn't it? Well, that's the whole idea. You see, money isn't complicated, but you know, money does have its own language. And the beautiful part is I speak that language. Private Money Club speaks that language. Now, you just need to learn that language. So, that's the first step. Community relationships. The second thing is, once you both get together and you form this relationship and you're communicating, well, you need to come up with the terms of the agreement. So you might have this awesome deal and somebody else might have the money. And obviously, we need the money to make it into the deal, or the deal never happens, right? So what we need to do is talk terms. So step number 2, we're going to need a note. That's right. We need a promissory note, because you, as the borrower, needs to borrow money from this person. This person has some set terms that they want. I want 12% on my money. I don't want to lend it out for any longer than 12 months. I want to be in first secured position, meaning, just like your mortgage, the bank's first. If you don't pay them, they take your house. Well, that private lender wants to be in first position. So the terms that you're going to have to come up with, which is the interest rate that's going to be paid, how the deal is going to be structured, maybe it's a joint venture, maybe it's just a lending deal, how long the money is going to be out for, and what happens if it goes beyond that time frame. Is there an extension, or now do you have to pay more money? All the terms take place in this note. So if you don't have a note, or you don't know what it is, you can just Google it. Or you can call an attorney in your neighborhood that specializes in real estate and ask them to show you a note, and you can figure it out that way. Now, let's move on to the next step. So the next step, once you got the terms figured out, what we need to do then is establish some rules, okay? Some basic rules. And the rules are going to be simple. Number 1, I have the money and you need the money. But I'm not going to just send you the money because that's too risky. I'm going to send the money to a third party. So, hey folks, you hang on to this for me. You're the third party. You're the escrow agent. Normally that's going to be something like a title company or an attorney, depending on the deal. Let's just call it an attorney because you all understand what an attorney is, I imagine, right? So they have an escrow and they will hold that money and facilitate the deal. So now the lender and you, the borrower, have established your relationship. You've established your terms. You've got your note signed, and now the lender sends the money to a third-party escrow. You see, the money never goes directly to the borrower until the deal is closed and the security is signed. So now we've got the money sitting there. So you, as the borrower, now feel really good because you know your deal can close. The money's it's right there. But there's a couple other things that we need to happen. We need to get the security in place. So we've got this great piece of real estate that's going to be worth X amount of dollars after you renovate it and do all the other stuff and you sell it. Or you rent it out. I don't care. Whatever you're going to do, great, fantastic. But the lender maybe doesn't feel super confident that you're going to be able to fulfill on that duty. So the lender says, you know what? Banks get collateral. Hey, Mr. Borrower, I need some collateral. I need some security for that money that's just sitting in escrow. And that, my friends, would be called a mortgage. That's right. If it's a piece of real estate, it's a mortgage. Maybe it's a lien. There's a whole bunch of names, deed of trust, but we're just going to call it a mortgage for all intensive purposes because all of you can understand what a mortgage is, right? So, what is a mortgage? Well, a mortgage is structured usually by a title company or an attorney, and it's a security instrument that's filed at closing. So let me walk you through that. The lender sent the money to a third-party escrow. You gave them all the terms and the note and all that stuff, and you signed. Now, there's one other form you're going to sign. We're close to closing. You're so excited because you're going to close on this deal and you're going to start working on it. You're like, yes, can't wait to get after this. But before you do that, you got to sign at closing or a day before a whole bunch of paperwork. A mortgage, and that mortgage is binding that deal and you to this money, meaning we're going to give you this money, but you're giving collateral for this deal. And if you don't pay that lender as per agreed upon on the note, well then, that lender can now put you into foreclosure and then risk your deal. They can essentially take your deal and make things very difficult for you, depending on what that note says that you guys agreed on. That's right. That is the single most important thing for the lender because that's security. The lender comes to you and says, you know what? Hey, listen, if something bad happened, like a tornado, or, there was just that hurricane that wiped out all of these properties a little while back, if something like that happens, how are you going to pay me back? And you, the borrower, says, oh, well, I have insurance on the property. So the lender goes to you and says, yeah, but that insurance doesn't list my name on it, does it? So the lender then wants you to get an insurance policy naming the lender as an additionally insured. Come on, you know how this works. Think about your car insurance for a second. Who's named as additionally insured on there? That's right, it's the bank. Whoever lent the money on that, right? Okay, when you got your house, I imagine you set up homeowners insurance, right? So who's named as additionally insured on that? That's right, the mortgage holder, aka the bank. Well, the lender wants to be the bank. So you might need to provide the same things to them. Get an insurance policy, put them on additionally insured, and make sure that it covers them for the proper things. So now you can see what all documents we've got. We've got a note, we've got the terms that only the borrower signs in most cases, then we've got a mortgage that the attorney drafts up and records at closing to make sure that the lender is in first or whatever position, but I like first position on that piece of real estate or other asset. Next, we want to make sure that it's insured, naming the lender as additionally insured, okay? So now you've got a whole bunch of action steps. You're feeling pretty good about this, and Private Money Club can really help you kind of put all of this stuff into place. There's a whole bunch of education and on-demand stuff that'll walk you through this type of thing. They call it best practices. And each one of these little steps is one additional thing the lender or the borrower has to do. But trust me, There's nothing complicated about this whole thing. Now, I want to talk about some ground rules really quick because we talked about rules, but let's just hit a few other things. The borrower, the person asking for the money, must be an entity. So if it's just you, Joe Schmo, or whatever your name is, and you're trying to borrow personally from this lender, that's a no bueno. You can't do that, okay? There were rules put in place back in 2008, 2009, and all sorts of other times that prohibits these kind of moves. This is a non-owner occupied piece of real estate. You've got to be an entity, meaning you've got to be an LLC, an S Corp, a C Corp, whatever entity it is, not a sole proprietor though. So if you're not an entity, well, come on, hurry up. We've got connections with some great people that can get you help and get that set up like tomorrow. So you've got to get that entity set up because the borrower needs to be a company or an entity so that the lender can actually lend to the proper company. All right, we got that out of the way. Borrowers, quick note for you here. Don't ever ask the lender to send the money to you. I don't care what the circumstance is, that is not good practice. There's always a third-party escrow agent. Remember, I gave you the money to hang on to until this transaction happened. The other thing, and this is just a little bit of due diligence here, this is really important. When I look at a borrower, the deal, yeah, I want the deal to be good, of course. I want the location to be good. I want to make sure that the numbers make sense. I want to make sure that there's multiple exit strategies. Oh, you're going to renovate it and flip it? Great. What happens when all the real estate in the country drops because we're into a deep recession? What's your plan B? Well, you know, Shawn, I never thought about that. Boom, you're done. I'm out. Not lending to you. But if you say, well, if that happens, I'll rent this out and then I'll basically be able to make payments to you and then I'll go to a bank or another institution lender and I'll take out money. And then I, being a lender, go to you and say, well, what if you can't? What if they all seize up and they won't lend to you? What's your next option? Well, worst case scenario, I could go and I could call up Uncle Phil, who's got a bunch of money, and I could then say, hey, I finished this deal. It's cash flowing right now. Would you lend me the money so I can buy out my original lender? Now, I've got a plan A, a plan B, and a plan C. And I'm feeling a lot better as the bank right now, right? When I'm looking at borrowers, I'm really doing my underwriting. I'm doing my due diligence on the person. The property is important, don't get me wrong, because if all goes bad, I want a nice piece of property to take, right? But I'm really lending to you. I'm lending to the borrower. So I'm going to underwrite you. And you know what? I'm going to ask you some questions. I want to see what's behind the curtain. Can you give me a personal financial statement? I want to know all your assets. And I want you to show me proof of those assets. Yes, statements. And then I want to know all of your liabilities. Who do you owe money to? Do you have a car loan? Great. You got one for you. You got one for your wife too? Oh, you've also got one for your kids. All right. Are you on the hook for any college loans? Do you have a mortgage? Great. Who do you owe? And how much do you owe them? And at the end, I'm going to take all of those different assets. I'm going to subtract your liabilities. And that's going to tell me how much money you have left. Or you don't have. And if you don't, well, game over. I'm also going to look at your income. How much income do you have? Do you have more than one income source? Because if this deal goes longer or it doesn't go as well as planned, how am I going to get paid? These are extremely normal things that any person lending would ask from you. So I know some of you are thinking this private money club thing sounds great. I also know some of you are probably thinking to yourself, well, I've never done a deal before. I want to do a deal, but maybe private money club's not good for newbies. Wrong. It's actually phenomenal for newbies because here's what a lot of new real estate investors are doing in private money club. They're coming in, they're looking at all the really experienced borrowers. They're looking at other people posting deals and they're taking notes. They're like, all right, I see what you did in this description here. That's awesome. I also see that you posted some really fantastic photos. This person actually attached an inspection report and an appraisal. I didn't even think of that. So they're taking a bunch of good notes. They're learning by seeing other people do it. And then what they do is if you're really smart, and maybe you're brand new, maybe you message one of those experienced borrowers on there and say, hey, I'm brand new to Private Money Club. I'm a new investor. I don't have any deals under my belt yet, but I would love it if you could give me any suggestions. Or If you find a really good deal, would you be willing to do that deal with me as a joint venture? Now, you're going to have to be flexible in the terms because the experience is going to obviously trump your ability to find the deal. But if you find a really good one, then you can kind of build up these relationships. And maybe you do a joint venture and that other borrower on Private Money Club might already have some really solid relationships with some of the existing lenders. So now all of a sudden what you've done is you've leapfrogged a ton of years. Now what you've done is you found somebody that's credible, somebody that's been doing this, and somebody that has existing relationships that you can just kind of piggyback on and learn from. You see how this can kind of start working for you? So if you think just because you're new, just because you don't have any deals under your belt, that this isn't going to work for you, then you have a lot to learn about life. And that is that you need to be more consistent and persistent in your actions. And you need to learn that it's not about your actual resources, it's about how resourceful you can be. And you guys, the community of infinite bankers and Private Money Club lenders and borrowers provides you with a group of people that can really help you get there. So if that's you, giddy on up. Go and stop thinking that cost is the issue here, because at the end of the day, you guys, cost is only an issue in the absence of value. Folks, if this didn't wake you up and make you realize how, with just a little bit of work and surrounding yourself with the right people, that your life can truly begin to change, I don't know what will. But if it did give you just that little glimmer of hope, what you should do next is head down to the description section of this video and click on that link. That'll take you to the homepage of my website where you can watch the full overview, which will be extremely helpful. After that, go ahead and book yourself a free cash consultation with me and my team, and we'll sit down with you. We'll answer all of your questions. We'll discuss exactly what your goals are and how infinite banking and private money lending can be the foundation to building your legacy. Don't forget to like this video, subscribe for more financial insight, and check out some of our other super helpful videos on the channel. As always, you guys, the information is free, but the knowledge is priceless. I'm Shawn King, and I'll catch you guys next time. Peace.